All right, bulls and bears, big week ahead for the economy. We've got massive tariffs like we've never seen before in the history of the US going into effect this week. Will it be a market changer? Will it not be? Also, we have warnings out there of mass starvation. I'm not even joking. I wish it was an April Fool's joke, but it's not. There's actually people talking about that because of all the cuts and the defunding of a lot of these food programs. We're going to talk about that and a lot more. Please make sure you are subscribed. Let's go ahead and get into it. I'm going to start right here. Oh, but first, this is our AI girl from the thumbnail. This is not clickbait. We're actually going to talk about her. She represents the U.S. consumer. And will she be shopping after these tariffs, like all these bags? She's been doing a lot of shopping. We're going to talk about that later in the video. She was in the thumbnail. She's going to be in the video. Don't worry about it. Some of you were complaining about my last video that the person in the thumbnail wasn't in the video. Well, she'll be back, and we'll talk about the shopping habits of the average U.S. consumer, kind of like her. All right, folks, let's go ahead and start right here. The weakness in the stock market is looking like it's going to continue. This is how they put it over at Fortune. Companies are slashing their earnings forecast as consumer confidence plunges to a 12-year low. And as most of you know by now, the U.S. consumer is the backbone of the economy, kind of like the AI girl with the shopping bags. Believe it or not, the girl with the shopping bags, the average shopper, is the backbone driver of the U.S. economy. It's driven on people borrowing money and spending money they don't have. Now, some of it is, of course, people spending money they do have, saved money, but most of it is swiping a card and people going further into debt. Well, hold on to your wallets, folks. Things are going to be getting a lot more expensive here. We've got these 25% tariffs that are already being implemented on automobiles. We have global tariffs now. If what is being said is true, if it actually happens, tariffs are going to be implemented on every country. There's no escaping the tariffs now, with countries that tried to shift their operations to different countries to avoid the tariffs. That's going to be impossible. And we've got massive warnings out here like this one. Take a look at this. Out of CNBC, first quarter GDP growth will just be 0.3% as tariffs stoke stagflation conditions. That's according to a CNBC survey. Now, we know that economic growth really is just people spending money. So if people are going to be cautious about spending, of course, that's going to be a drop in GDP or a drop in the GDP growth. Is it devastating for the economy? It can be if it's prolonged, because when people pull back on spending, remember, people are the driver of the economy. The U.S. consumer is the driver, spending money they don't have typically. So if people are afraid or scared or just cautious about the future, you're going to likely see a pullback. And it's not just me saying this. Take a look at this report. And this is what most people are going to do with their tax return. And this was put out in a recent Go Banking Rates article here. Here's the number one thing Americans will do with their tax refund. Well, a lot of it is paying off debt. Over half, 52% of Americans planned to use their refund towards paying bills like rent, utilities. 44% plan to spend it on groceries and essential goods. So basically bills and essentials like utilities and rent. So not really vacations and living the glamorous life now, because so many people are just buried under so much debt right now. So that's according to Go Banking Rates. I mean, let me know what you think, but I think that's pretty accurate with the state of the U.S. consumer right now and the average U.S. shopper under all-time high levels of debt burden. And it goes more on here. According to the survey, about 37% plan to use their refund to pay down credit card debt. Among those who plan to use their refund towards their credit card debt, over half, 56%, are specifically targeting debt they racked up during the holiday season. We're talking about debt from 4 months ago now, or 5 months ago if you want to count the very beginning of the shopping season last year. And people, a lot of these people with their tax refunds are just going to see it go right back out the window to the bank that they borrowed from. Also, it goes on here to say that only about 22% of people getting their tax refunds, and not even everybody's getting a tax refund. A lot of people have to pay in, but the ones that are getting a refund, only 22% are going to be using that to put in their savings, or about 20% are going to be using that to cover a home improvement repair or project. All right, people, next we have Target. Target's in the news. They're basically following Walmart and Costco in trying to get the suppliers, in this case China, to absorb some of the cost of these tariffs. So the retailers here, one of the three biggest retailers, are really concerned about the state of the U.S. consumer. We already saw a pullback in consumer spending, and people were changing their spending habits starting many, many months ago. And retailers were even warning back in the holiday shopping season that something's changed, and there's been a shift in the way people are spending money. So now basically Target's out there doing the same thing as Costco and Walmart. So we'll see how this plays out, folks. But I sense there's a lot of panic, and maybe not noticeable panic. They're not going to go scream their heads off on TV or anything like that. But we could see the moves that are being done, and the retailers are definitely looking at the near future here and how these tariffs are going to impact the shoppers. And currently there's about a 20% tariff on Chinese imports, which is impacting around $430 billion of goods. Target does not operate any physical stores in China, but it says it's worked to reduce its reliance on Chinese imports, cutting the share of its goods from 60% to 30% from China. Now, when I read your comments down here, there's a lot of people that still say nothing's going to happen, nothing's changed. But people have been saying that for years, but a lot has changed and a lot has happened, right? A few years ago, prior to 2020, no one would have ever imagined that we would have seen price levels get to where they're at right now. No one would have ever imagined that these bubbles, the housing bubble, just the cost of living bubble, would never go bust. No one would have ever imagined permanent inflation and price levels that just continue to rise, even at these levels of debt that right now are way worse than the financial crisis. It's been like that for over 2 years now, right? The debt has been worse than the financial crisis for at least over a year. I'd have to look, maybe closer to 2 years. Bottom line is, nobody predicted this, folks, except for maybe a few channels, myself included. I'm not bragging or anything like that, but all you have to do is look at the statistics and look at kind of the operations of the ones that control these things, right? The powers that be. They don't want the cost of living to go down. They want people burdened with a lot of debt, because people that are in debt tend to fall in line and keep their heads down and work a lot harder, and they complain a lot less. I mean, that's how I look at it. But look what Goldman Sachs is coming out and saying here. Goldman Sachs sees the tariffs spiking inflation, stunting growth, and raising recession risks. So how fragile is the U.S. consumer, where it just takes 20-25% tariffs to throw the whole economy into a downturn? And when you talk about tariffs, you have to talk about housing. Because why? Because we're very reliant on imports for lumber, right? And look at this, folks. Canada. We get about 80%, roughly 80% of all softwood and lumber imports into the U.S. are from Canada. Canada is the dominant supplier. And you think there's a housing shortage now, just wait until we see further price increases in the cost of materials. And then as prices continue to go up, of course, people demand higher wages. So now companies are going to have to pay higher wages, folks. So it's going to be something like we've never seen before. Now, we are done with the first quarter, and we're going to start seeing these first quarter numbers come out in the next few weeks. Of course, we're going to be on top of all those numbers for you. And please make sure you're subscribed so we can stay on top of that. But we've got a lot more to get into. And let's go here next. Since I brought up housing, you need to make $117,000 to afford a typical U.S. home, which is a little over $400,000 right now. And people in California need to make even more. I think it's about $160,000 you need to make here to afford the median home. And most people are not doing that. The household income needed to afford a home has risen by 50% just since 2020. Again, the people that say nothing's happening, look what's happened since 2020. A 50% increase in the amount you need to make in order to afford just the median priced home, just a typical home. Home buyers in 30 states need to make at least six figures. The biggest jump was in Utah, where the income needed was increased, or it had surged by 89%, folks, for Utah. That's insane. And of course, the belief out of this current administration is that, yes, it's going to be some short-term pain, some temporary pain, transitory pain. Should I say that word, transitory? And but it's going to be better on the other side. The question is, can the consumer right now, in the position that the consumer is in, as far as debt to income and savings being so low, can the consumer withstand even a few months of higher costs. And in this case, possibly drastically higher costs. And we hear some people out there kind of downplaying this. They're saying, well, it's no big deal because people are already used to inflation. Yes, they're used to inflation, but not further inflation on top of already record high price levels. With unaffordability at all-time highs, now you throw on more inflation on top of that, more fuel to the fire. And here's how they put it over at the London Telegraph. The administration is plotting the biggest tax rise in global history. Basically, if the consumer is paying for it, they're comparing it to a tax. The burden for paying for the bulk of the president's tariffs will fall on the consumers potentially at about $600 billion a year. And speaking of tariff uncertainty, the U.S. stock market just posted the worst quarter since 2022. And what do you see in store for the second quarter? Will it be the worst since maybe the financial crisis, maybe since the dot-com bust, maybe since the health crisis scare back in 2020 where stocks took a dip and then screamed right back higher because of all the helicopter money that was dropped into the economy and all the intervention policies that were placed on the economy and into all the markets. And we're also seeing tariff-induced layoffs increase. We have another recent one just here in the past 24 hours. Cleveland Cliffs lays off more than 1,200 workers as tariffs hit demand. A number of North American steel manufacturers are struggling to deal with the impacts of these tariffs and this current trade policy. And folks, the flight to safety is in full effect as I'm recording this. Gold is $3,162. And I wouldn't be buying right here, but there is going to be a big flight into gold. We typically see big run-ups followed by pullbacks. So if I was going to get into any more gold, I would wait for a pullback. There's people out there saying it's never going to come down, that it's going to go up just parabolically and never come back down, right? I mean, you have your own investment strategies. I have mine. Do what you will, but let me know what your thoughts are down below. Will you be jumping into gold or gold stocks, or is silver a better deal, or are you going to be hedging against inflation or doing a flight to safety somewhere else? Either way, please let us know down in comments. And I still hear from plenty of people that are just sitting back, heavy cash position, kind of like Warren Buffett, waiting for something to break. Instead of massive inflation, there are people out there still expecting some sort of bubble to burst. And we do see a lot of risks out there with all the leverage happening right now. But a bursting bubble and falling prices and deflation and having buying opportunities is going to be very tough in this tariff-induced inflation environment, if you ask me. All right, and speaking of all-time high unaffordability, back into housing just for a second here. Eye on Housing came out with this statistic here, pretty interesting. The affordability pyramid shows 94 million households cannot afford a $400,000 home, and that's about the median home price right now nationwide. So 94 million households cannot afford it. Here's what they call the affordability pyramid. And when you see right here the $400,000 to $500,000 price range, oh, I'm sorry, let me move myself out of the way here. The $400,000 to $500,000 price range, only about 12 million households can afford that. In a nation of what, about 350 million people, only 12 million households can afford the median priced home, which is in the $400,000 to $500,000 price range. Pretty sad, but that's where we're at right now. All right, now I've said here many times that in order to keep up with the cost of living inflation, I rely on investing. And there's people that look at these stocks and they say, for example, Nvidia was never going to come down. I warned right here in this channel, right almost near the top, that this stock was way overbought. And take a look at what happened here. We see a drop here. And I'll go out to a long-term chart because this shows you the better view of how unsustainable this price rise was. Up to about almost 138, and now it's dropped down to about 108. And I think there's going to be a little bit of a pushback up there to try to squeeze out some of the shorts. And I think we're going to see further downside, folks. I see this stock going all the way back down to about the mid $70 range before the end of the year, right? Remember, we call it right here in this channel as soon as it hit that price level. All right, folks, back to our AI shopping friend here. And she's back over there with her shopping bags. Look what's happening with online shopping. QVC fires 900 staffers. What does it mean for shoppers? So another sign that consumers are pulling back. Shoppers accustomed to a certain way of shopping on the QVC home shopping network will have to soon get used to a new way of buying, as QVC has laid off 900 employees. They're reorganizing. And QVC, which runs QVC and HSN home shopping channel, began laying off hundreds of employees last week. So what's the deal with this? Are people pulling back on spending? Is that what's going on? Are they going to have AI robots now pitching the products instead of real people? You know how they put the product out there and they test it out and they show you how great it is. So what's it going to be? Goes on to continue here. We made a very difficult decision to eliminate a number of roles in the U.S. This impacts approximately 900 team members across the U.S. For many of these individuals, today will be their last day at the QVC group. So it makes you wonder what these people are actually doing. If they could just lay off 900 people just like that, were they actually needed or were they actually essential in the first place if you could just get rid of them just like that? Very interesting. Now, it does go on to say here that they're changing their focus on how they're advertising now to online social media platforms, including probably YouTube right here. It even mentions TikTok as part of the strategy. So this is part of the whole media transition, as a lot of these big networks are losing viewers and more people are turning to social media to get their information, to get their news. I think a lot of people are kind of tired and kind of see through the corporate spin on a lot of the news and on a lot of the information, even the economic news, right? Depending on which channel you watch, one channel says the economy is great. The other channel says it's collapsing, depending on what side of the political aisle that channel happens to fall on. And remember, that's how they keep everybody divided. They keep everybody with opposite views, and they keep everybody basically going at each other's throats so they can take the blame off of the actual problem, which is the whole system of money right now in this infinite debt creation capabilities that we have with what's known as a fiat dollar, where you can create trillions of dollars at the click of a mouse. All right, moving on here, folks, now to, I think, what might be the darkest topic of this report here today. And this is what people are saying. It's not me saying this, but here's actually what's being said out there on the street, so to speak. Okay, we can get rid of AI girl here. Here's how they put it over at USA Today. There's going to be a lot of hungry people, food banks, farmers across the U.S. decry federal cuts. Cuts to the Department of Agricultural programs that provide food for schools and food banks have communities across the county worried. They're talking about a mass starvation event, a lot of hungry people. That's actually what they're saying here. Because of these cuts, the abrupt cancellation of funding for programs to help food banks distribute healthy local food is being felt across the country as some already strapped organizations turn to their local communities for help. In early March, the USDA said it was cutting more than $1 billion in funding for schools in a cooperative agreement, folks. So what do you think about this? Will we see the situation that no one would ever thought we'd see in the United States? Great Depression 2.0. People have been predicting that for a while. And many people thought that this would never end, that there was never going to be a cut in any sort of spending, and there were never going to be any chopping any agencies or mass federal layoffs. Many people thought this would never happen, right? So this is a shock. This is a surprise to a lot of people. And by the looks of it, it could be most felt here in California. The current administration halts hundreds of trucks that were destined for California food banks. The number of monthly clients has risen to 310,000, more than double the number of people the food bank served before the health crisis. So the demand at this particular food bank, Sacramento Food Bank and Family Services, doubled since 2020. And people still say that nothing's happening, nothing's changed, nothing's going to happen. Folks, they're wrong. Things are happening. You just have to open your eyes and realize that this is pretty bad. When something, food bank dependency doubles in around 5 years, that's pretty dramatic. That's pretty extreme if you ask me. And the thing is, not really much is being done to help it. Are we growing more food? No. Is food going to get less expensive? No. Now with all the tariffs, we're going to have a bunch of higher priced food coming in. We really rely on foreign countries for a lot of things, bananas, avocados, most of the coffee. People can live without coffee, but coffee is kind of addictive, so some people can't live without it. You know what I'm saying? But anyways, let me know what you think about all this news today, folks. Let me know down in the comments what's going to happen here. And also, like I was asking a lot of people earlier, what's your strategy during this time? Sit back, hold cash, wait for the fallout, or is there going to be no fallout and you need to invest because prices are going to rise? But what if we see stagflation where there's not many great investment opportunities, but the cost of living is still rising? So no economic growth, not much investment opportunities, stagnant stock market, maybe a dropping stock market, so not much investment opportunity. Let me know down in the comments. Or could it be time to go short on this market with some put options, right? Kind of like in NVIDIA, what we did a few months ago now. Let me know, folks. Keep stacking, everybody. Thanks for being here. Make sure you're subscribed. Help keep this channel alive. Big love. Bye for now. Peace.